Hey Utah, there are major changes coming to the economy and to the housing market, and these changes are going to be impacting new construction and is going to give home builders a whole other hurdle that they're going to have to get over. Now, multiple banks collapsing is not a good thing. Hearing people saying that the interest rate has gone down 0.5% and that is signaling that it is the time to buy is ridiculous, and that the bank collapses are going to have zero implications on the economy and on the housing market. I can't even believe some of the stupidity that I'm hearing out there. Silicon Valley Bank was the number one bank for tech startup companies. Almost 50% of the tech startups that went public last year got their funding through Silicon Valley Bank. Silicon Valley Bank funds almost 50% of tech startup companies that are not even yet public. How is that not going to impact the economy? Where are they going to get their loans? And we have the Silicon Slopes. I thought that was one of the driving factors of why our home values were not going to drop and people moving in. Well, if the tech industry is taking a hit, that is definitely going to impact housing. Right here. Amid the bank sector woes, concerns mount about financing drying up for home builders and home buyers. The restrictions that are about to be put in place is going to make it harder for home buyers to get loans and for home builders to get loans. And home builders, their loans are usually 6 months to 3 years. They're going to have to refinance, get new loans out, and that is going to be much harder to do now. And that is going to impose for these home builders a whole other hurdle that they were not prepared for. That is going to have big implications and big impacts on the housing market. Now, before we dive into this and go over this data really quickly, 20 seconds. If this is your first time to the YouTube channel, I'm Dinko the Realtor. I've been in the real estate game since 2016. I specialize in helping people just like you along the entire Wasatch Front, the greater Salt Lake area. I have people reaching out to me all the time and I absolutely love it. Also, smash that subscribe button. That way you're notified when new videos drop, because this kind of analysis and game-changing information you're not going to be able to find anywhere else. Now, right here, we see that financing is going to be drying up for home builders and buyers. Right here, Utah is the state with the most new construction being developed, with 11.7 new builds per 1,000 residents. That is more than twice the national average of 5.23 new builds per 1,000 residents. Don't let anybody tell you that there is no new construction going on in Utah, that we don't have new construction that is having a hard time selling. Our numbers right here, you see this, 11.7 per 1,000 residents is the highest in the nation. We are the number one state percentage-wise when it comes to new construction. You're not going to find this data anywhere else. Do me a favor, smash that like button. It'll really help the YouTube channel grow. Now, this is the big impact that the bank collapse is going to have, that people are saying is not going to impact anything, signaling good time to buy. Interest rates dropping 0.5% because we are on the verge of a financial crash is not a good thing. I don't know why that would be a good thing. Right here, the Fed to consider tougher rules for mid-sized banks after Silicon Valley Bank and Signature fail. So right there, they're going to be tightening the lending restrictions. And if we scroll down right over here, we see tougher capital and liquidity requirements are under review, as well as steps to beef up annual stress tests that assess banks' ability to weather a hypothetical recession. Right now, banks are going to have to be putting more in reserves. They're going to have tighter and more restrictions on lending procedures. We know in the previous video, March of 2020, the onset of the pandemic, the Fed removed the reserve requirements for banks, meaning the banks did not have to have the 10% reserves. They were getting free money and they could go out and make these historical profits and just invest everything. Well, all of this caught everybody off guard, and now we're facing the issues right now. So right here, why is that an issue when it comes to new construction? Well, if money is drying up, it's going to be an issue. And right here, we see land development loan is likely to require more from a borrower in terms of credit worthiness and cash reserves. Right here, in other words, they'll want to know that the land can be improved and resold for an amount that will repay the loan. If people are moving to an area, jobs are plentiful, and housing demand is high, the lender is more likely to approve the request. Well, weren't people moving all over the United States? Wasn't housing demand high everywhere in the United States? So when you come and you present these facts, you were able to get these loans out much easier because everything was booming, and then it caught everybody off guard in 2022 with how fast the Fed was raising rates and how fast interest rates went up because of the stubborn fight on inflation. And right here, we see that these loans are short in term in nature, typically lasting 6 months to 3 years. Interest rates can fluctuate substantially. And right here, a larger down payment of 25 to 30%. So let's say a lender, or not a lender, a builder goes bankrupt. Well, if they go bankrupt, the lender, they're not in the business of building homes, selling homes. So what do? They want to offload that. So what they'll do is they'll offload it at a discount to the next builder. And that builder comes in and they're selling the houses for less money. Now, that is going to be a big time issue because these loans, 3 or 6 months to 3 years, well, there's going to be some builders that are hanging on to the inventory much longer than they anticipated. So now when they go back to the bank, they're going to have a harder time refinancing. They're going to be having a harder time getting more money out. So they're going to have to now have maybe lower margins. They're going to have to get different financing and maybe even rapidly liquidating these houses in order to avoid such an issue. Let's say that their loan is due in August or September. Well, they're going to be wise to start cutting the prices in order to avoid defaulting on their loan and that getting repossessed by the lender. See how that's going to have implications? Saying that banking collapses are not going to have any impacts is just ridiculous. That is just stupidity at its finest. Right here, we see that financial success of a construction business, so this is contractors, largely depends on the ability to manage cash flow. Throughout a project, contractors face a significant outlay of cash for materials and other needs, but months often pass before they even see income from the project. As a result, many contractors turn to financing to pay for a project expenses to cover their costs until payments become rolling in. So contractors, they'll go to a new construction site, they'll do the build, and they won't get paid right away at times. And sometimes they might have to wait for that house to actually sell. Well, if a builder collapses, now the contractor can't pay their workers. Those workers can't pay their car loans. They can't pay their mortgage. They can't go out and buy food. See how a collapse has impacts on other areas? So to say, oh, yeah, that collapse isn't going to have impacts on anything else is just stupid. And right here, we see banks and other traditional lenders often consider construction too risky to finance. So they have to get their financing through different means. Now, right here, if we go over and we take a look, this is an article that I pulled up that was right after the 08-09 crash. So this article is about 10 years old or maybe even older. One plausible explanation for why spec builders, new for sale builders, suffered the heaviest losses is that housing recession caught them with significant land inventory, possessions that they were unable to profitably unload, and as a result went out of business. Well, this caught people off guard, and it caught builders off guard. In February of 2022, new construction starts were 22% higher than they were in February of 2021. And the high interest rates caught everybody off guard and that stubborn fight against inflation. So now they're saying, oh yeah, we were prepared for it. No, you weren't, because there's articles, there's statements saying that you did not anticipate this happening. And then right here, check this out. I want to show this other article. And before we actually get to that, this one right here. So we went over this article, but the Silicon Valley CEO sold $3.6 million worth of shares February 27, just days before the bank disclosed a large loss that triggered its stock slide and collapse. And the CEO sold nearly 30 million of stocks over the past 2 years. He wasn't being straightforward and honest. He was hiding things. That's why they're getting sued. But you think these builders are just going to come out? I mean, even if they are struggling, they're going to try to make ends meet because that's their livelihood. It makes sense, right? And right here, I want to end it with this article. I missed the telltale signs of the coming recession. This is for somebody who went bankrupt in the 08-09 crash. In 2007, print advertising in my magazines started to plummet. That was the first red flag. In early 2008, my bank recalled my line of credit, even though I was an excellent customer. They claimed that they were canceling most lines of credit as their company was sold to another bank. Well, First Republic just got bailed out, and JP Morgan, Wells Fargo, these other big banks are now putting a plan in place for them. Are they not going to be pulling some loans back? And when these other banks start getting acquired and they start putting these restrictions in place, people are going to be affected. To say that the collapse is not going to have any impacts on the housing market, on the economy, is just, again, flat out stupid. Make sure you smash that like button because you're not going to find this data information anywhere else. That way you can make that financial decision that you feel comfortable with. If you don't want to wait for the spring inventory to flood the market, give me a call. We can go take advantage of the housing market right now. I'll negotiate you the best deal that I can. And if you do want to wait, if that's 3 months, 6 months, or a year, make sure that you subscribe. That way you're following the channel, and that way you know when you're financially ready to make that purchasing decision. And my contact information is down below in the description. And until next time, have a great day.